Hi there, you're watching Market Cafe on etnow with me Shreyansi Singh, and with me as always is my co-anchor Snehi Shah. And over the next 1 hour we'll take you through news and updates from within the country as well as across the globe, tell you which stocks you should keep on your radar and tell you what the brokerages are saying as well. But Snehi, first things first, let's take a look at some big headlines that we have to cover this morning. Right?
Absolutely, very important speech or an interaction that we need to cover this morning. Hi there, good morning. Let's kickstart our coverage this morning with the big headlines from the Nirmala Sitharaman exclusive. Now in an exclusive chat with Times Now, the finance minister discussed the budget. Speaking about her concerns around supporting the middle class, she highlighted that while she would like to do more, the increase in the standard deduction from 50,000 to 75,000 rupees will aid the salaried class. She also noted that the changes in the tax rates are designed to reflect the government's commitment to addressing tax-related issues. Here are a few excerpts from that chat.
I respect this issue of middle class should be given some rahat. How much ever I wish to give, I love to give more. But after a point, it's also, particularly when it comes to tax-related issues. That is why, to make a difference to the salaried people, I made sure that the standard deduction will go up from 50,000 to 75,000. Once the tax rates are also being changed, that will benefit even the higher tax payers. Because for every 1 lakh, first 1 lakh, first 5 lakh, first 10 lakh, first 15 lakh, the kind of benefit that will benefit even the higher income groups. So, first of all, our intention to give something to the middle class salaried people, I increase this standard deduction. I can do more, I wish to do more, but there are limitations in taxation. How much more can I give is a question that I have to look at. So ideally, yes, I love to give more, but there are limitations. And I have to consider there are limitations. That's why affordable housing, I'm giving some kind of a benefit, and subsidized interest. I'm also making sure that student loans for students who are going to study in Indian universities is up to 10 lakhs, and on that also a subsidized interest will be given for families to pick up for children's education. Disinvestment is not a process which I've got a cabinet approval, so I want to sell this today, I will sell it. No, it requires a lot of preparatory work. Many of our PSUs are now being professionally run, and therefore their valuations are all going up. But I'll have to find my best time to disinvest them. And that best time depends on so many different factors. The company's own readiness to meet the challenges of a market are not simple tasks. They consume time. But we will honor the cabinet approval decisions. The CBDT has been putting out, and even now as I've come for this interview, there is a few frequently asked questions section, FAQs, which the CBDT has put out, explaining in detail as to why this has been made. Yesterday in the press conference, the Revenue Secretary neatly explained as to how 1.25 lakh has been exempted annually for the smaller investors in the market. They are not subject to 1.25 lakh is not subject to the tax. So keeping in mind the small investors, we've given that exemption. But as Revenue Secretary rightly explained, majority of them who are earning big amounts out of it are the ones who will be paying 12.5 rather than 10 now. And the indexation removal has been explained very clearly with case instances. So many cases have been shown as those which we studied before we brought this, so that people will pay lesser than what they have been paying even with indexation. What they're going to pay at 12.5 is lesser than even what they have paid if the indexation were to be there. I would want everybody to please go through the explanations, the clarifications, the FAQ which the Income Tax Department, the CBDT, has put out. then you'll know that it is certainly not going to hurt most people. There can be some who are, getting that benefit at a higher level, but certainly not the middle class, certainly not the poor, small retail investors.
All right, that's the word coming in from the finance minister in an exclusive conversation with Times Now. But with that, let's refocus, talk about what the world was doing last evening, global markets. And first up, let's talk about the US markets. And if I have one word to sum up the action we saw yesterday, it is mayhem, because blood was shed on Wall Street yesterday. Deep shades of red coming across across my screen. You have stock futures that rose last evening after a sharp tech-driven sell-off dragged the Nasdaq Composite and the S&P 500 to their worst session since 2022. Now, let me take you through what these intraday moves look like. And Dow was lower by 1.25%. 500-point cut coming in on that index. What's worse, S&P 500 lower by 2.3% or 128-point cut coming over there. And if you think this is where the sorrow ends, you're absolutely wrong, because you have Nasdaq that has fallen the most by more than 3.6% lower yesterday. A 655-point cut coming in on the Nasdaq in one intraday session alone. Lots of lots of negativity seen on Wall Street yesterday. Wednesday's trading session saw intense declines for both S&P 500 as well as Nasdaq. This was driven by disappointing quarterly reports from Alphabet as well as Tesla. This led other heavyweight tech stocks and artificial intelligence darlings like nvidia and Microsoft to fall in sympathy as well. Both the broad market index and the tech-heavy benchmark posted their worst session since 2022, while the Dow Jones Industrial Average shed roughly 500 points to end the day. Now, investors have been viewing the recent declines as a sign of an overdue correction in an overbought market, which is now seeing a rotation away from mega-cap tech stocks into the small-cap stocks and more cyclical areas of the market. Remember, last week, the entire week, we have been highlighting the moves on Russell 2000, which is America's small-cap index, because that was seeing some exuberance while all three of your benchmarks were lagging in trade. Now, on the earnings front, and after hours trading, Ford Motors shares tumbled about 11% after the company's second quarter earnings came in much lower than what the analysts had expected. We'll tell you more about this later in the show as well. Chipotle, meanwhile, added roughly 4% after topping earnings and revenue expectations. IBM and ServiceNow also rose after beating expectations. We'll talk about IBM's results in more detail a little later as well. Now, although some major tech names missed expectations this week, an overall positive earnings season so far is propping up investor enthusiasm. More than 25% of the companies in the S&P 500 have reported their second quarter earnings, according to FactSec data. Now, in terms of what other data we can hope to see, Thursday will see an additional slew of financial results from American Airlines. You have Northrop, Grumman, Honeywell, as well as Hasbro, among several other companies that will be coming out with their quarter two numbers. On the data front, you have jobless claims and preliminary second quarter GDP data, very important metrics. Both of them will also be released before the market open today, US time. But while that was the US, let's focus and look at Europe. And well, in tandem with the US markets is what Europe has performed, because DAX is lower by 1%, FTSE lower 0.2%, and the overall stock 600 also pressured 0.6% lower. But while that was on the equity front, Shreyansi, also tell us what crude and gold were up to.
Well, absolutely, and it's very difficult to look away from that bloodbath that we saw on our screens, right? And mayhem just about sums it up, Snehi, for Wall Street. But then let's also take a look at US crude oil futures. And they rebounded yesterday, breaking a 3-day losing streak as stockpiles fell. Gasoline demand as well rose, and wildfires in Canada also are raising the risk of supply disruptions at this point. Now, when you take a look at US crude stockpiles, they fell by 3.7 million barrels, and when you take a look at gasoline inventories, you're looking at declines of about 5.6 million barrels for the week ending July 19th there as well. And this is, of course, according to the EIA data coming in. Now, gasoline supply to the market, a proxy for demand, increased by 673,000 barrels per day. So that is the kind of picture that we've seen for crude stockpiles as well as gasoline demand. Let's also take a look at the price boost that we saw then. When you take a look at WTI September, the most active contract, you're looking at levels around $77 per barrel. So an uptick of 63 cents or 0.8% coming in there. When you look at it on a year-to-date basis, though, you're looking at gains of about 8.3% there as well. Let's also take a look at Brent then, because you do have Brent that is pinned at those $81 per barrel levels. Uptick of about 70 cents or 0.9% coming in for that one as well. And year to date, that contract is also ahead 6%. Meanwhile, wildfires continue to rage in Alberta, though oil production in Canada remains solid. The worst of the wildfire season still lies ahead and could pose a risk to supplies. So that definitely is something that the market is looking at, and that's also something that Goldman Sachs highlighted in a note on Tuesday as well. US crude oil fell nearly 2% on Tuesday, mind you, the third consecutive day of losses coming in for that benchmark, and amid renewed hopes that Gaza ceasefire negotiations could de-escalate Middle East tensions, and as gasoline demand in the US has largely disappointed so far this summer season. So that is something that we saw coming in on Tuesday rather, and then we also covered the move on Wednesday as well. But let's also take a look at gold prices then. Gold prices rose on Wednesday as the dollar slipped, with investors' focus also shifting to US economic data due this week, fresh signals on the timing of the central bank's interest rate cuts as well. So when you're looking at the price movements coming in for gold, you do have spot gold that was up about 0.7%, around those $2,400 per ounce levels. Now in terms of other asset classes, you also have Bitcoin that led the crypto market lower. On Tuesday, the first trading day of Ether ETFs also, and the price of Bitcoin was last lower by 3%, and that's the kind of move that we've seen this week for Bitcoin coming in. Important day that we had for Bitcoin there, so important to mark that as well. But then that's the roundup coming in terms of oil, gold as well as crypto, Snehi.
Absolutely, but you know what, before we move any further and talk about the cues to watch out for in today's trading session, India as well as globally, I quickly want to draw your attention to what the GIFT Nifty is implying. A 0.7% cut, a 178 point drop on the futures basis, and on the spot basis, it's a 200 point drop coming in. So, well, taking cues from the way US has performed, Europe looked largely under pressure. We'll just have to see what Asia is up to, but other than that, looks like it's going to be a very pressured session for us. But with that, let's also take a look at all the important things that you need to be keeping out on your radar today. Today being Thursday, it's the weekly expiry, so that is going to add to a lot of pressure. Remember, it's the first expiry after the budget and comes at a time when there is so much pressure building around globally in global equity markets. From the US, like we mentioned, you have GDP as well as initial jobless claims coming out. Shifting focus back home, let's talk about some nifty earnings today. Two companies coming out with their Q1 numbers from the Nifty pack. You have Nestle as well as Tech Mahindra. In terms of other companies also coming out from the non-Nifty pack, you have a whole lot of companies like you have Embassy Office REIT, you have Glenmark, Avash, Chalet, Mahindra Holidays, Ramco Cement, Venus Pipes, Ujjivan, United Breweries, Tech Mahindra, and a whole host of other companies. Moving on to some corporate action, a few stocks to keep your eye out on today. KSB is going to be a stock to watch out for because their board is going to be mulling stock split today from 10 rupees to 2 rupees per share for face value. VST Industries, also watch out for that. You also have some news coming in that Damani, who used to be the investor, has sold a significant stake, and other than that also you have the board that's going to be meeting today to mull a bonus issue as well. Today is also the last day to buy shares of LT Foods as well as Share India to be eligible for their dividend. Now lock-in ends for JNK India, wherein 4% equity comes out of lock-in. And in terms of some other news then, the Congress is going to be presenting its first full budget in Telangana, and there is some word on the street that some farm loan waivers may be announced, so keep a close eye on that as well. Joe Biden will be addressing public for the first time today after ending his election bid, and you have some important commentary trickling in globally. ECB President Christine Lagarde all set to speak, and from the Fed you have Michelle Bowman as well as Laurie Logan all set to speak today, so keep a close eye out on all of these cues.
Well, absolutely, and there's a lot of speeches to keep an eye on, but let's also shift focus to top stories we're tracking this hour. Then sales of new US singles family homes fell to a 7-month low in June as higher mortgage rates as well as prices based on demand further evidence that the housing market recovery faltered in the second quarter. Sales have dipped 0.6% to a seasonally adjusted annual rate of 617,000 units last month, the lowest level since November coming in there.
Well, on to some earnings then. Automaker Ford delivered a miss on its second quarter earnings while beating revenue expectations. Now, the miss, largely led by warranty costs, have plagued the company for years now. They have, however, increased their full-year target for free cash flow but maintained its 2024 earnings guidance, disappointing the street that had hoped for a hike on that front. Ford shares tumbled 11% in after-hour trade.
Meanwhile, let's also take a look at global tech major IBM beat second quarter estimates for revenues and raised its annual growth forecast for their software business. And the recent uptick in AI-linked spending leading to the earnings beat is something that we're seeing coming in for that one. The 113-year-old company now expects the segment to grow at a high single-digit percentage in 2024. Big Blue's shares rose about 3% in extended trading, set to add to their year-to-date gains of about 12% from a rally in stocks of AI-linked companies as well.
Let's keep it going with earnings then. One of the world's largest chip makers, which is SK Hynix, that's also a supplier to nvidia, posted its second quarter earnings. The company's quarterly profits came in at a 6-year high as it continues to maintain leadership in advanced memory chips for AI computing. Operating profits spotted a rebound from the last 2.88 trillion won losses. Company also posted a 32% rise in revenue compared with the previous quarter.
Alright then, that was the daily dose of morning news to go with your morning coffee. But for now, it's time for a quick break. When we come back, we'll take a look at how the Asian markets are faring, so you don't go anywhere.
Hi there, welcome back. You're still watching Market Cafe with us on ET Now. Let's talk about some nifty earnings that trickled in yesterday. L&T was a big one to watch out for. Quarter one revenue beat estimates to rise 15% compared to the same time last year. Margins remained largely unchanged. Net income grew 11% on a year-on-year basis, largely inline set of numbers that came in from L&T yesterday. Let's take a deeper dive into what the fine print looked like. Revenue came in at 55,120 crores, which was up 15% year-on-year. Net profit at 2,786 crores, which is up 11.7% year-on-year. EBITDA also grew by 15.3% year-on-year. Margins is the one pain point, because while there was no decline, margins came in largely flat at 10.2%, up only 2 bips when you take a look at that on a year-on-year basis. So largely you had revenue that beat street expectations. EBITDA was in line, but net profit was below what the street was expecting, giving it a rather mixed set of quarter one numbers from L&T. When you take a look at what the order inflow looked like, order inflow for the quarter that went by was at 70,936 crores, and the consolidated order book of the group on 30th June was as high as 4.9 lakh crore rupees, which is up 19% year-on-year, but also a healthy uptick of 3% coming on the sequential basis. Order book share of international orders came in at 38%. Now, when you should focus and take a look at what the infra segment did, infrastructure project segment secured order outflow of 40,000 odd crore rupees. International orders constituted 49% of this mix, and infra segment EBITDA margins were also up at 5.8% versus 5.1% on a year-on-year basis. Overall, international revenue contributed 48% to the total revenue in quarter 1 FY25 compared to just 40% in quarter 1 FY24. So that was largely what L&T's numbers looked like. But let's also go across and listen into what the management had to say. We have words coming in from R. Shankar Raman, the CFO at L&T, talking about the quarter one earnings and the order inflow. Let's listen in.
The domestic orders, however, grew by just about 1% during quarter one of the current year as compared to quarter one of the previous year. And the major contribution for this order inflow for domestic orders are from hydrocarbon sector, transportation infrastructure sector, and heavy civil business. In a way, this modest growth in the domestic order position was anticipated. We see a very encouraging order prospect pipeline, and if you were to size that opportunity, it indicates a prospect pipeline size of over about 9 trillion rupees, and about 60%. Roughly about 60% of this 9 trillion rupees is domestic opportunities, and about 40% is in overseas markets. Of the 9 trillion rupees, all the businesses that are in infrastructure sector have sized their opportunity at about 6 trillion rupees. And the order prospect pipeline for the energy sector is about 2 trillion rupees, and all the rest of the business adds up to about 1 trillion rupees. So the thrust to infrastructure, the thrust to energy transition, etc., that both the Indian government and international market, the governments of the international markets where we are present, actually augurs well and is supportive of the mix of the order pipeline that we are able to assess presently.
All right, and that was a word coming in from the management of L&T. Let's move on then, but still keep going with earnings. Take a look at Axis Bank that reported a mixed set of quarterly results. So profits were a miss and asset quality also deteriorated further. Let's go across to my colleague Gaurav, who's standing by with the earnings fine print. Gaurav, tell us about the report card and the key highlights then.
Well, yes, Axis Bank reported its Q1 numbers, and if you look at the numbers, those were a little disappointing, and the main reason being that the credit cost increased significantly, and that is the reason why there were some concerns around the asset quality. Now, first, let's look at the numbers. When we talk about net interest income, that increased almost by 12% on a YY basis. PPOP, which is pre-provisional operating profit, grew almost by 15%, while PAT grew only by 4%, which was a miss when we talk about etnow estimates, if we compare it with the etnow estimates. And the reason being that provisions were a little high for this quarter. Provisions increased almost by 97% on a year-on-year basis and also increased by 72% on a sequential basis. Apart from that, when we talk about net interest margins, now bank reported net interest margins at 4.05%, which was again stable if we compare it with the previous quarter, which was at 4.06%, but there was a one-off impact in net interest margins. Other than that, let's look at some of the concerns which were raised in Axis Bank. The first one is advances and deposits growth. So when we talk about advances, that grew almost by 14%, while deposits grew by 13%. Now, why this is a concern is that when we talk about deposits, Axis Bank already sits at a LDR ratio of higher than 90%, and management had also highlighted that deposits growth could be a constraint for advances growth in the near term. And if you look at deposits growth, that actually degrew sequentially by 1%, and that is the reason why there were concerns around the growth. Second concern, which is a main concern, is asset quality, because if we talk about slippages, that increased to 4,800 crore rupees, and thereby when we talk about credit cost, that increased to 0.97%. Now management again highlighted that this credit cost is not going to sustain for the entire year, and we may see some moderation, but at the same time they said that the credit cost will not go to the levels that we have seen for Axis Bank, because we will see some increase in credit cost for industry as well as for the bank. Other than that, when we talk about some of the other metrics, GNP has increased almost by 11 basis points on a sequential basis, and NNP has also increased by 3 basis points. So when we talk about Axis Bank's result, asset quality was a main concern that was raised around Q1. When we talk about brokerages also, now Macquarie has maintained their outperform rating with a target price of 1,420 rupees, but they also believe that there was a little disappointment, and NIMS has some kind of one-off impact which can take off almost 6 to 7 basis points on a sequential basis. When we talk about Bernstein, now they have also maintained their outperform rating with a target price of 1,250 rupees, but at the same time when we talk about Nomura, they have actually cut the target price to 1,430 rupees, while Nuvama has also went ahead and cut the target price to 1,435 rupees for Axis Bank. So we are seeing some price cuts also coming up from brokerages on the back of this. If we talk about GDR also, we have seen a fall of around 4.5% in GDR. So definitely watching out on how investors take these numbers and how Axis Bank performs in a day-to-day.
Alright, thanks Gaurav for taking us through that. Axis Bank will be a stock to watch out for. Weak set of numbers coming in, but let's move on. And it was a good set of numbers on the flip side coming for the quarter gone by for United Spirits. MD and CEO Hina Nagarajan said that FY25 will be a tale of two halves, much like FY24. Let's go across and listen to what she had to say.
There are certain true-ups of provisions, right, which for the quarter are giving us 100 basis points benefit in our EBITDA margin, right? So if you normalize for that, the 19.5 should be read as 18.5, and then you are well aware of the A&P, which is the lowest in this quarter. Once you normalize that, we are back in that, 16.5 kind of a range, right? Now, I will look at it positively, because that gives us the confidence that we are pretty much in a position to continue to expand the margin trajectory a little bit from where we ended last year. So we are in good shape.
We are expecting the first half to be, steady, little muted, lower than our aspiration, but overall for the year, we are sticking to our guidance. There is hope that consumption will pick up this season, right? And there is also the scale-up of some of our innovations and renovations, which will really dial up as we go along the year. McDowell's X Series, for instance, with our range of vodka, rum and gin, right? We expect to tend to national distribution. And, we've got Johnny Walker Blonde, we've got Royal Challenge American Pride still scaling up. So it is a question of base effect plus the fact that we will have national rollout of our innovation and renovation portfolio.
All right, there you have it. So that's the word coming in from the management. But let's also take a quick look at what brokerages had to say then. When you take a look at what Nuvama said, they've upgraded the counter to buy from hold. And in terms of the target price also, they've hiked the target price to 1,630 from 1,195. And in terms of other triggers, they're seeing strong cost control measures also aiding margins. In terms of their reasons for upgrade then, they've highlighted three key reasons. So margin outperformance is one, headroom in premium categories as the other reason, and they're also highlighting wedding as well as festive season as one of their reasons for the upgrade coming in. In terms of key triggers then, let's take a quick look at what the triggers were. And they talked about demand recovery in the second half of the year. They've also talked about favorable tax slabs in Karnataka for United Spirits, and they've also highlighted new policy in Andhra Pradesh as well as potential India-UK FTA deal. So those are the key triggers that Nuvama has highlighted when it comes to United Spirits, and that's the verdict coming in from brokerages then.
Well, very well done. United Spirits also going to be a close one to watch out for in today's trade. But on that note, we'll slip into a short breather on this edition of Market Cafe. More stock-specific news and updates when we return. Hi there, welcome back. Still watching Market Cafe on ET Now. Let's now take it across to my colleague Ansh, who's standing by with the F&O snapshot of what the derivatives could look like today. And Ansh, Nifty expiry today, it's a Thursday. Tell us what you're spotting. What levels can we expect to see today?
That's right, but let's start with what FIs did in the previous session. We are seeing that in index future, they have added around 40,000 short contracts, which is a bit of bearish, and also the total long has dropped below that 70%. Also at the same time, we are seeing that retail have added around 60,000 long contracts. So here, retails are getting positive on the market. Now, if we talk about Nifty, then Nifty has been taking good support at 20 DMA, and this series so far, Nifty is up around 1.5% and has been advancing for second consecutive series, which is a positive sign. But on option front, we are seeing some call writing happening at 24,500, indicating some resistance around this level. If we talk about rollover, then that has been around 49%, which is below its three series average of around 59%, which is a bit of a cautious signal here. Whereas if we talk about Nifty Bank, then Nifty Bank expiry is next week on 31st July. Whereas if we check the chart of Nifty Bank, then that has given a breakdown from head and shoulder chart pattern in the previous session, which is a bearish sign. Also, we are seeing this series so far, Nifty Bank is down by around 3%. Now, in last 5 series, Nifty Bank has been advancing, but this series it seems to be getting in a negative zone, which is a bearish sign. Also, on option front, we are seeing a call writing happening at 51,500, indicating resistance around this level. Lastly, let's have a quick view on few F&O stocks that are in focus, and we are seeing high rollover happening in Naukri, Alchem Labs, Zydus Life, Max Financial and SBI Card by more than 90%, whereas low rollover in Steel Authority, GNFC, ITC, Berger Paints and Piramal Enterprise. Also in ban list, we have today Vodafone Idea and India Cement. So keep an eye on the stocks.
Absolutely, Ansh. Thank you so much for joining us with that roundup. We'll also take a look at the stocks that we should keep on our radar. But before that, on the top of your screens, you do see the Nifty implied open, and that briefly slipped below the 24,200 levels. Of course, yesterday we shut shop around the 24,400 levels. And currently, what we're penciling in is a massive gap down, and it's gotten worse for us, what with that handover coming in, with Japan's Nikkei also tumbling nearly 3%, and that tumble down that we saw on Wall Street as well. So important to keep an eye on how we open as well. But before that, let's also take a look at the stocks that we should keep on our radar. And we have Janet joining us in the studio. Janet, tell us which are the stocks that make it to your list.
Well, yeah, so firstly, PG Electroplast company came up with a very strong set of earnings. The revenue stood at 1,320 crores, which was an uptick of about 95%, and net profit jumped about 147%, coming in at 84 crores. Moving on, Sona BLW, also another good set of numbers. Revenue saw an uptick of about 22%, whereas net profit saw a jump of over 27%. SBI Life came up with an inline set of numbers with expectations. Revenue increased to by 12%, coming in at 1,005 crores, whereas net profit jumped about 36%, coming in at 520 crores. JK Paper on the flip side came up with a weak set of numbers. Net profit saw a downtick of about 55%, and Tatwa Chintan as well, weak set of numbers. Net profit declined about 46% to 5.2 crores. Moving on, CG Power will be in focus as the company has entered into agreement with acquisition of 55% stake in JG Tronics. This will be done with an acquisition worth around 319 crores. And moving on, RVNL will be focused as companies received LOA from Southeastern Railway for a contract worth 191 crores.
Alright, so keep a close eye on all of those stocks to watch out for in today's trading session. Thank you, Janay, for joining us in the studio and helping us with that. But on that note, it's a wrap on this edition of Market Cafe. From Shreyansi, me and the entire team just put this show together. Thank you so much for watching. But as we bid you goodbye, you still stay tuned to the channel because the market takes all of the action ahead.